YouTubers, Mike Martin's here, Mike Martin's channel. Another Australian housing crisis story, guys. This is a big deal, and I wanted to get this out there before I do trends in the housing market tonight. Mortgage delinquencies mount as more borrowers find their home is worth less than their loan. This is a big deal. Who wants to own something that's worth less than what they bought it for? That's horrible, especially when the biggest asset you own in your life is your house, and when you're paying 17, 20, 30 times your income to own a piece of the sweet life, and it ends up going south. And I've been talking about this for many years now. This is not like a two-week bandwagon thing. Buried deep in ANZ's first half results was a pretty disturbing story of just what is happening to the property market. Key points of this article, guys. ANZ says mortgage delinquencies are rising as households are doing it with low wage growth. Falling house prices are exacerbating the problem, lending to borrowers owing more than their house is worth. So remember, a lot of people got on this interest-only crap, and the bank's been putting a lot of interest-only crap on their books, and that's bad debt, because they're never going to pay down the asset just floats. It's in limbo. You know what I'm saying? There is evidence that banks are losing patience and forced to sell off houses may prick up, hitting both the owner and the bank. We saw 500 to 600 families in this half get themselves into difficulties in terms of not being able to keep up with their payments, ANZ boss Shane Elliott observed. That's a lot higher than we've seen in the past. So question is this a trend? Is this a blip? Looking at ANZ's 90-plus mortgage delinquencies chart, it certainly looks like a trend, not a blip. Over the last 4 years, in virtually every state and territory, delinquencies have stepped up sequentially each year. That's pretty bad. In Western Australia, it looks like a very worrying trend. So here it is, guys. Queensland, New South Wales, Australian home. You can pause it here to take a good look at it. Australian home loan 90-day plus delinquencies. Western Australia is being hit. Look at that. Holy crap. And there's your portfolio right there across the board. But look at this. Wow. So a lot of people are according to this, 16, 17, 18, 19, yeah, according to this, people are, yeah, it's hitting the fan. Sorry, because I'm looking at it through the phone. This colors look switched. So it didn't look too bad, but now I just kind of looked above the phone to look at it. Yeah, that looks pretty bad, guys, and it's a trend. It definitely is a trend. Western Australia's boom and bust. Western Australia is seeing interesting case and study for the broader economy and the nexus between a slowing economy and rising unemployment and mortgage stress. The 2012, the mining boom was in overdue in the West. Remember, I got a couple of guests on the show telling us what's happening in Western Australia. Housing went from $170,000 to $200,000 all the way up to $400,000, $500,000, $600,000, $700,000 homes, and a lot of people lost their shirt during that mining boom. Depleted, but there are mining uranium there. They're mining. Lithium ion there, and that's becoming a big thing now with China making electric cars and stuff, and we're going to kind of follow that and see what happens. The stated economy was growing almost 14% year on year. The unemployment rate moved under 4%, and the mortgage delinquency rate on ANZ books at least was under 0.5%. Stagger forward to 2018. And Western Australia's economy barely grew. State of domestic product was just up 0.3%. Unemployment had jumped to more than 6%, and delinquencies had risen fivefold. Western Australian property comprises 13% of ANZ's mortgage portfolio and 30% of its 90-day plus delinquencies. The counterpoint is that New South Wales and ACT now are the strongest jobs markets. Unemployment has been holding steady above 4% for a fair while. Together, they comprise around a third of ANZ's home loan book, and less than a quarter of it is distressing mortgages. Victoria and Tasmania combined have a similar profile. Remember what happened in Tasmania? Everybody moved out to Hobart to buy their dream house, and a lot of people did well. A lot of people bought in at the right time in Hobart and actually did well. Hopefully they didn't tap into their home equity loans and use their homes as an ATM machine like many people did to keep up with the Joneses. And now there could be a slight panic happening out of Tasmania. ANZ, wary of property lending. It doesn't take a lot of imagination to see what would happen if jobless queues started lengthening in the eastern states. It's the best of times is the worst of times, and perhaps Dickinson tale in the tale of two economies. Unemployment's low, the interest rate's low, inflation is low, Mr. Elliott noted, but the wage growth is stubbornly low. There you go. Wages are not catching, so we're worried about families doing it doing it a little bit, though out there. Tough, though. I can't read. Sorry, guys. I'm reading through this phone screen like this, through the phone screen. It's a blurry sometimes. Okay, families are doing it a little bit tough out there. They're doing it, but it's a little bit tough out there. Sorry, I just don't use that combination of words. It is English, though. I'm trying my best. But anyways, guys, to the point, to the message here. This ain't good. This ain't good at all. And I've been warning people for years about this. A broken record. Many years. I'm not talking 2-3 years. Many years I've been talking about this. And I was off by a few years because I didn't know what tricks and smoke and mirrors the governments had up their sleeves and what the banks were up to. Especially what the whole Royal Commission found when they actually dug through the books. It was pretty bad. Pretty bad. Of the big banks, ANZ has been the most wary about the property market and has throttled right back on lending. Of course. In the 3 months to April, ANZ home lending fell 3% compared to 2% rise across other banks. Lending was far stronger in the more risk-embracing, less regulated non-bank sector. So shadow lending, guys, and shadow banks. And remember, I'm not sure if the shadow banks that are not part of the federal banking system are governed federally in Australia, just provincially. I'm not sure. In Canada, shadow banks or just lending, secondary mortgage lending, the private mortgage companies are only regulated provincially, not federally. It's the cost of borrowing that causes the stress. Home buyers are currently enjoying the benefits of mortgage rates bumping along and historical low levels. So you know that obviously they're going to lower rates again. So this is the cash rate versus lending rates. So here you go, guys. There's this is your personal loan rate percentages. Here is your discount variable rate, and here is your RBA cash rate. So it's historically going to this astronomically low levels, and it's not good because it's really hard to hedge against inflation and propping a weak dollar. So watch out. Negative equity, the problem of falling house prices. They are slathering on extra layers of pain and risk and increasing the number of home buyers who have discovered they have borrowed at or beyond their capacity to repay. The bank should be at the banks needs to because a good underwriter and a good lender could look, a good branch manager could look and say, this is going to fall apart in 6 months. There's no way this guy's going to be able to eat unless he's on some water diet for the next 10 years of his life and just drink water till he dies. There's no way this guy's going to eat. And a good underwriter could look at the credit bureau, look at a total debt service ratio, compare them, and then start comparing, analyzing different things, and kind of give a good perspective of someone's life in the next 6 months to maybe the next 5 years. Apart from everything else, falling prices act like loan to valuation, LVR, bracket creep, pushing existing borrowers above 80% thresholds where they'll have to take out expensive mortgage insurance. In the previous quarter, lending up at the end of last year, the property price slide was just starting to accelerate. Around 3% Westpac borrowers were nudged above 80% LVR. Oh my God. It's peace of mind for the bank and an extra imposed for the borrower. Wow. The Reserve Bank recently raised negative equity where the outstanding balance on the loans exceed the value of the property it is secured to as a growing concern. Negative equity is a big problem for a borrower to lender alike. Borrowers remain in debt if they are forced to sell, while the banks take a haircut too. Hey, that sounds like me. So no bottom in sight, and here's your weakness carrying over. Wow. Percentage house values forecasted by percentage. Pause that. Take a good look at that. And I wanted to get this out there. This article goes on and on and on. I wanted to get this out there, but keep it under 10 minutes and get you guys So let's watch out for unemployment levels in